Hey guys, it's Wave 618. It's the 18th of February 2019. So we're long due an update video on Bitcoin. That's what we're going to talk about today. We're going to refer to the long-term count. And on top of that, we're going to break down what's happening on the short term. It's very messy at the moment. We will zoom in so it's a lot more clearer. But yeah, as well as Bitcoin, we're going to discuss Ethereum as well, because it's always good to look at a correlating market. Yeah, so that's what we can look out for in today's video, so stay tuned. Alright guys, so before I dive straight into the video, first thing I want to just say before we talk about Bitcoin is that planning to do another 50% discount on the course. That's wave618.com. So if you're interested, that's going to be available for the next 48 hours. So that will expire midnight GMT on the 20th of February. Yeah, so that's available there if interested. All right, I'm not going to dwell too much on that. Let's talk about Bitcoin. So first of all, as I say, we're going to talk about the long-term count. So I'll break this down exactly how I had it, my Elliott wave count. So for those of you who have been watching my videos, you know very well, this was my wave W down to here. And then we had an X wave, which was a descending triangle. That was an A, B, C, D, and E, whereby wave B didn't quite reach the base of the triangle, but that said, it doesn't have to. Only two of the sides, the upper portion and the lower portion of the triangle only need to be hit twice to fulfill the criteria of a triangle, which we did see here, and 3 times on the top. So we saw a nice descending triangle, and then another three-legged pattern down, one wave, second wave, third wave down to here. And just to further explain this first wave, which was my W, so obviously a W is a 3-wave count, so first wave, second wave, third wave. Now that is certainly my preferred count. There are people out there suggesting that this is 5 waves down. I really can't see that, to be honest. First of all, if this was 5 waves, I'm assuming the count would be 1, 2, 3, 4, 5. So then we've got wave 4 overlapping wave 1, and people who are counting 5 waves there, their argument will be this is a leading diagonal, where wave 4 is allowed to overlap wave 1. But to be honest, if we're going to call this a leading diagonal, then you really need to see a diagonal pattern. You need to see converging price action, and I just don't really see that. So, I mean, connecting the highs there, and then if you draw another line connecting the lows, you can see we break out of this. It looks like a bit of a channel, but we break out. So it's more of an expanding pattern. I mean, you can have an expanding diagonal, but it's very, very unlikely. And I think you're really clutching at straws, really, to call this a 5-wave count. And so for that reason, I'm very happy with calling this 3 waves down. This being first wave, second wave, third wave. And another feature that really helps us show that is a Fibonacci projection of our first wave. So if we start at the bottom of the wave, draw a Fibonacci projection all the way up to the top, you can see we hit the 1.618 very nicely, which means our third wave is a 1.618 Fibonacci projection of the first wave. So again, a very nice Fibonacci relationship there, suggesting that it's a 3-wave pattern down to here. So that's certainly my preferred count for the first wave. I'm very happy with this descending triangle. I've tried to look at various other counts. That is certainly my preferred count. And then coming out of that triangle, so our triangle finished here, we've got another 3-wave pattern down, which I would call Y. So this would be W, X was our descending triangle, and then we had wave Y, and wave Y again is 3 waves. So this was our first wave, second wave, third wave. And basically what we saw, and I had been calculating this bottom around 3200, I was predicting that wave Y would be a 0.382 extension, Fibonacci extension of wave W. So this is where X finish and Y starts. You can see the 0.382 is around here, 3156, and we hit it almost to the T. Okay, so I've been calling this a long time. That was always where I was forecasting price to come down to. Now that said, obviously price can come down further, and I'll touch on that later in the video. But that's first of all the WXY. Now obviously a WXY, that could be the end of a correction, or alternatively we could have a WXY-XZ. So right now this potentially could be a corrective move up, forming an X wave, before we have a Z wave completing the correction down. That's a possibility, and we'll discuss that possibility shortly. So yeah, that was the WXY down to here. You can also see we've got a channel connecting these highs. If you draw a parallel line from this low here, and you can see price bounced off the line when it hit it again. So another bit of support there. Okay, so that's it really for on the longer time frame. Actually, having said that, I've discussed this in a previous video, but we'll just discuss it again here. In terms of time, I'm very happy with the amount of time that has surpassed here for a correction. You know, when price came down to here, I knew price hadn't finished coming down. It was this wasn't a big enough correction to justify this huge move up. So you're just using Fibonacci time. This was our low following the 2014 Mt. Gox crash. The bottom was here. So a major move up was all the way from around, I think it was $156 all the way up to $19,666 up here. And we've got, yeah, using Fib time, I was looking at price, you know, perhaps making a move up around end of January, 25th of January we got here. If we zoom in, we can see obviously it bottomed before then, you know, mid-December. But that's basically saying that this correction is a 0.382% or 38.2% of the time, the duration of this impulse. Now that's very reasonable. That's a very reasonable time frame for a correction. It doesn't have to be longer than 0.382. So obviously here it was a very short correction. Certainly didn't feel like we had finished. But there's no reason to suggest that it needs to go on longer than 38.2% of this move up. It really isn't. Anyway, before we make a conclusion on whether it's going to make another leg down, there's a few more things I want to discuss. So that's just the Fibonacci time perspective. Now what we can do, we can just zoom in on this. So it's one thing to explain first of all. I'm going to explain this box here just for anyone who's new to the channel. So this is my weekly order block. So if we pull up the weekly time frame, basically what this black box is incorporating is these two red candles here, so this was what I call the order block that preceded this aggressive impulsive move up. Yeah, so there are obviously a lot of orders here. It was a corrective sequence. You can look at it from a Wyckoff point of view also if you like, if you zoom in. But basically it was a coiling of price consolidation that preceded the aggressive move up. So what's the significance of this box? Well, the top of it and the bottom of it will often act as support and resistance. So just mentioning this here, so when we look at these lines this rectangle to the right hand side, we know what these lines are representing. These black lines, it's the weekly order block there. All right, now let's zoom in, 4 hourly. Okie doke. So if you watched my last video, you'll know that I was talking about this finishing a WXY correction. With this being a WXY down to here. I labeled it, I put it on Twitter, made it quite clear that I was calling the bottom here. And then you can draw this, once you've got your first two waves in of this move up, you can then draw a pitchfork. So I've drawn this is a shift pitchfork. So first pivot at the bottom here, second pivot at the end of the first wave, third pivot at the end of the second wave. I've drawn a shift pitchfork, suggesting that this is going to be a corrective bounce and not an impulsive move. Because as I say, I am leaning towards the idea of Bitcoin making another move down. And you can see right now we're approaching the median line. So a good place to take profits, really, at least some profits. But I do expect price probably to come up to this black line. What was that black line? That was our weekly order block. This is the top. This black line here is the bottom of the weekly order block. That's the top. So I do think we can probably see price come up to here to complete what would look like a three-legged corrective pattern, with this being our first leg, second leg, third leg. And I was thinking that we would probably test our upper median line with confluence of the weekly order block. That's a possibility. Obviously, I can't say we're going to see the top exactly on this time, what's it saying, 6th of March. But it's something to aim at. Yeah, it's something to give us, it's something to aim at. Obviously, we can see here we've broken out of this pitchfork. So what is this pitchfork? It's on even smaller time frame now. So we had a first wave up here, and then we had our second wave, and then we came up to our warning line. I posted this on Twitter where we were hitting the median line here. You could see that price was curving out, rolling up, starting to roll up. And what is this rolling of price? So this is essentially divergence. So we use these oscillators, these MACD, RSI. I explain this in my course, that the MACD and RSI, all they are is mathematical models for telling us that price is curving or losing momentum. So it was going down, and when it starts to curve rather than continue its trend down, that means it's losing momentum. And all it is a mathematical model telling us that's what's happening. But really, most of us, I believe, will be discretionary traders, which means we're looking at the chart. So why do we need a mathematical model to tell us that price is curving? The naked eye is a lot more effective at determining that than the MACD and RSI. The MACD and RSI are reserved for more people who are algorithmic trading and not looking at the charts. They need some way to know that price is curving because they're not monitoring the chart all the day. We have the luxury as discretionary traders of being able to see price curve out, so we can see it happening before the MACD and RSI will even detect it. So I've mentioned MACD and RSI in my course because they are important to features to understand. But in terms of incorporating them in my strategy, it's not something I'll do, because I believe Elliott wave, a correction wave, incorporates MACD and RSI. Correction patterns generally show divergence, and you can see it here. What was exciting me at this point was the fact that we had tested this median line on multiple occasions. We'd seen an impulse up, a very corrective pattern coming down, and clearly finding support here. It was over the weekend that we found support, a time when you don't really see much volatility. And what do you know? We approach Monday and we've shot up. So also, I do remember I did mention on Twitter that we came down below this dotted black line. This dotted black line is our February open. So I was a little bit concerned because this was looking very corrective coming up. And I basically made a decision that I'm not going to go long until we go back above the dotted line, this February open. And you can see once we went above it emphatically, and the move did play out. So this is what we called the bottom, and it was very, very close to meeting the bottom, almost formed a double bottom, not quite, and then shot up. So yeah, and what is this dotted line? This is our 2019 open. So this is the year's open. You can see price found resistance here, and then since then we've gone above it quite emphatically. I'm pretty sure we'll see a close above it, a daily close, but I'm very sure we're going to see price come back to this level, and it's another good buying opportunity in the short term. That's the way I'll be looking at it. Here we can see we've hit our median line. I am expecting a bit of a retracement here. So yeah, as a day trade, I would want to be taking a lot of profits at this level, if not all, just because it's made a good move up. It's hit this median line here. So that's a day trade. If you're swing trading, by all means hold. I mean, I would be holding a swing trade up until aiming for this. This would be my target. Yeah. So the top of this order block, which is the black line, or the upper median line here. If we see confluence, then certainly that is a sell signal. This line, that line. There is obviously a downward trend line that a lot of people have been focusing on, which is this one. And we've spiked above it. Will we stay above it? Well, there's a good chance, because I think if we bounce off this level, there's two options. We could retest this upper warning line of this pitchfork and go back up, which will also be retesting this downward sloping line. Alternatively, we may retest the yearly open, yeah, around that 3693 level. But yeah, as I say, my target's up here. It is difficult if you didn't get in round here to get in now, because you would have to have your stop below here at least, I would have thought, because this was where the impulse started. Yes, you could try and defend the yearly open if price comes down to here and then get in. But yeah, ideally around here, down here, these are the places you would want to enter. So this is my short-term target up to what we're looking at. It's around 45.70, around that level. I do think we'll probably see price come up to there. Okay, so yeah, that's Bitcoin. I think I've explained the main things that I was looking at. And yeah, as I said, we'll look at Ethereum as well. So pulling up Ethereum. So this is, I want to show you something very interesting on Ethereum. So daily time frame. So this was my count for Ethereum. I've got a WXY. Now this looks very skewed. Obviously, Y looks huge compared to W, but this is, we're on the log time frame here, don't forget. So if we come off log, and now it looks a bit more regular, like a WXY. With this, you can see a 3-wave pattern to make W. Then we see a relief X wave, and then another 3 waves down to make a Y. You could also call it a WXYXZ, even possible. Right, anyway, back on our log chart. I used our first 2 waves. So this was the first wave, W. Then we had that X. Then we can draw our pitchfork. So first pivot, second pivot, third pivot. We're using here a shift pitchfork, and we're on the log scale. So very important when you're using pitchforks that you use the right scale. And you can see I really liked this pitchfork because price really adhered to these lines. So you can see we came down through the median line, lower median line, back up to the median, lower median line, all the way up to the upper warning line. And then it ranged between the upper warning line and upper median line for a while, came all the way back down to the median line, etc., etc. Basically, you can see these lines are being respected very nicely. Lower median line then getting hit. Now what has happened? We're breaking out of this pitchfork. So the idea is that the pitchfork is determining trend. Once you break out, it suggests that the trend is being broken. So does that mean we're seeing bullish price action now? Well, we'll have to see, because obviously we've run the daily time frame, and this has been going on obviously since over the last year. So it needs to break out convincingly. We want to see monthly closes above the pitchfork, really. But certainly, if price comes down to this upper warning line, that for me, I'd be very tempted to buy in, unless obviously it's just looking like a wick above the upper warning line here, a wick on maybe the monthly chart, for example, or the weekly. So yeah, we need to see a long time frame close above this warning line. But this is very interesting. So I would suggest anyone who's follows me that they try plotting this pitchfork for themselves, and you'll see how it's price is adhering to it very nicely. So the other things that were supporting this move were obviously there was this order block here. It's a blue order block, which means I found it on the 4-hourly chart. So using the candle bodies on the 4-hourly, and price hit the bottom of this order block. As well as that, it's a 94% Fibonacci retracement of the entire move up. So this was the where it started, finished, 94% retracement. Obviously on the log scale it doesn't look like 94%, but when we do this it will. Okay, back to our log scale. So yeah, this is really why I wanted to show you the Ethereum chart in this discussion, in this video, just to show you how we're potentially breaking out of this pitchfork. So that's a bullish signal. Now the thing about Ethereum, if we look at this chart in isolation, imagine if we just ignored all the other cryptos and we just focused on Ethereum. If you pull up the volume, there's a lot of volume that's come in at the bottom here, yeah, which suggests that price could just start, it could have bottomed. I mean, if you were just looking at the chart and ignoring all the fundamentals, what's in the news, anything about Bitcoin, anything about crypto, you would see this looking like the completion of a correction pattern, and it's breaking out of its pitchfork, and loads of volume came in here. There'd be a very good shout for this to be bullish. But the problem is, it's a bit of a discrepancy with Bitcoin, because with Bitcoin, we just don't get that significant volume. Really high peaks in volume here that we just haven't matched here. Now, the argument is there could have been a lot of dark pool activity to mask a lot of volume, but that's not typical. You would still expect to see a lot of volume on the exchanges at this bottom here, and we just haven't seen it. So that is why I would still lean to the idea of Bitcoin making another move down. So as I say, we're probably going to come up to the top of this order block. I'll be looking closely at this upper median line here of this pitchfork going up, this shift pitchfork. Could we possibly test the top of this channel here? That's possible as well. I'm not sure we're going to make it as high as this horizontal level here, where obviously price bounced many times at 5,800. That's a little bit too high, but we'll have to see. And I'll be looking closely at what Ethereum is doing, because that's a very interesting chart for me. Yeah, just because it looks like it's finished a corrective sequence and it's broken out of that downward pitchfork. So with Ethereum, obviously there's always the possibility of Ethereum completing its bottom, whilst Bitcoin may make a new low, whilst Ethereum just makes a higher low. That's possible. There could be divergence in that sense. The altcoins, lower market cap coins are more volatile, and so they can easily bottom before Bitcoin. That is possible. Generally, the majority of them are following the trend of Bitcoin, but some can dissociate slightly and show some divergence. That can certainly happen. Yeah, so I think that summarizes everything I want to say regarding Bitcoin and Ethereum. As I say, there is that 50% discount on my course. It's over the next 48 hours. So I'll put a link to that in the description. Within that link, you'll be able to find out what the course entails. So you don't have to jump in and purchase anything. You can find out exactly what the course involves. I've explained it in detail on the description page that the link will lead you to. So yeah, if you're interested in my trading style, I go into everything in detail and explain it as clearly as I can, really. Which I hope will be of use. And so yeah, until next time, I'm going to wrap it up there. So all right, take care, guys.